expectation is to build, of course, 3x, 5x out of the funds, but definitely out of the direct opportunities, we are pursuing a 10x, 15x, percentage. So collectively, definitely we can create these offer returns that the LPs are looking for. So we are aiming to really have, the traditional expectation of a venture capital industry around 30%, but definitely with this hybrid approach. So that is our expectation, and I do believe that we will achieve it.
Hey everyone, this is Prashant and I'll be your host for the VC10X podcast. And today we have Adriana Tortajada with us. Adriana is the CEO and managing partner at 1200 VC. She is a pioneer in the venture capital industry across Mexico and Latin America and a Kauffman Fellow. Adriana has managed more than $1 billion in fund investments, as well as bringing 20 plus years of experience empowering the venture capital ecosystem. In this episode, we talk about the unique hybrid model of investing, what they look for in GPs, how long it takes to make an LP commitment after the first meeting, do spinouts make good fund managers, perspective on the current exit market, and so much more. So without wasting any time, let's dive straight in.
This episode is sponsored by my own podcasting agency called Podcast10X, where I help VCs start and run their own podcast. While I was running VC10X, this podcast that you're listening to right now, I asked my VC guests, why don't you start your own podcast? I mean, it's the best form of marketing for VCs. As they say, VC is a people play more than even a capital play. A podcast enables you to put your people at the front, your portfolio founders, your partners, and co investors. It's a great way to build a brand and win competitive deals. It activates all your marketing channels in a single shot, be it YouTube or blog post or newsletter or social media. Everything gets activated in a single shot. And I get the same response from all the VCs that it's a lot of work and we don't have the time for it. I said, all right, let me handle the work for you, from pre recording, editing, publishing to making social media clips. All you have to do is show up on a call, hit record, do the recording using the well researched outline we provide you with, and you're done. We handle everything else. You know what they said? All right, let's give it a shot. So if you are a VC and want to up your marketing and branding game, I'd love to work with you. And if you're thinking there are too many VC podcasts already, remember there are way more VC firms out there. And if you're not standing out, you're losing out. So if you want to work with me on starting your podcast, go to podcast10x.com and book a call today. I'll add the link in the description and show notes below. Look forward to working with you.
Hey Adriana, so good to have you on the VC10X podcast. How you doing?
I'm doing great. I'm so happy to be in with you this day because you are in the night, I'm in the morning. So thank you,
Totally,
Prashant, for
dude.
having me.
Absolutely. Yeah, it's a pleasure having you on. And to start things off, can we first have your story and how you got into the world of LP investing?
It's a long story short. I promise I will try to make it shorter because it's almost more than 2 decades that I started my career at the venture capital industry. So I started in the early 2000s managing the first deep tech fund in Mexico. Can you imagine that? Those were not attributes of our brand. Those were not something that we were, the characteristic of a country like with beautiful, tequila, friendly people and mariachi and all of those things. So I did my bachelor in finance, so I visualized myself working in Wall Street and that romantic stories of the high executive woman. And I ended up doing my internship after I graduated in the Ministry of Economy at the states of Jalisco, and I got in love of the public-private service. It was like amazing the lack of understanding of all the parts, of all the actors of the development ecosystem. So I thought, oh my goodness, this is a great opportunity to become an interpreter, right? So I started getting so passionate about what were the missing gaps that we need to fill with new programs, new, different initiatives that facilitate the entrepreneurs or the business people to really succeed on their endeavors. So that's where I, started to did actually my specialization. So I did my master degree in public policy and sustainability. And then I create different strategies, and I started to build bridges among all these actors that were not recognizing themselves and were not actually getting this trust. At the end, if we use the English framework from this industry, you use normally the investment trust like a vehicle, and there was a lack of trust among the actors in the emerging economies. So I was, quite pioneer to really, create these first platforms, these first initiatives, these public-private programs. So I support the creation of more than 45 new companies based on science and technology, 100% made in Mexico. And with that initiative, we actually inspire a movement. We inspire the rest of the actors of the this word, put it, the word linked to the development bank. I was working for the National Development Bank back then. And we inspired with a 30 million fund with 45 investments, a huge movement in the region. So that actually inspired, the Fund of Funds of Mexico to launch the venture capital business unit, because no one was, also supporting the other side of the equation. We were supporting startups and high impact entrepreneurs, but no one was supporting the emerging fund managers that's needed to really invest in early stages in technology, right? So I helped to create those initiatives like an LP. So I started my career being, I jumped from being a GP, or let's put it that way, a fund manager, right? Trying to help the startups to raise the first 1 million round and solve all the rest of the problems, development, and scale up. And innovation in emerging economies is really challenging, as you are quite aware. So imagine all of the things that we need to solve around it. And then, of course, helping the Fund of Funds to launch the venture capital business unit was another challenge. And I become an LP. So I started to understand how to really co-invest with others, how to really create these strategies, how to become a magnet for the most promising GPs that were willing to, invest in these emerging technologies, that were willing to help them to scale globally. And after that, Mexico really become a vibrant hub of technology, because we launched a public policy and a new organization named National Entrepreneurship Institute. So suddenly, 10 years after, it was 2013, the entrepreneurial movement and the venture capital industry was at top of the list of the priority of the country. So with all the things that we have been doing in the last decade, so that inspired a huge movement that launched, with the IDB Lab, Inter-American Development Bank, a fund for the Pacific Alliance countries, a venture capital fund. We inspire the rest of the development banks launch their own fund of funds to invest in emerging fund managers and high impact entrepreneurs, to invest regionally, not only locally. This industry is very international, right? And be linked with North America. At the end, we are a continent that has two different speeds growing. So we inspired Colombia, Chile, Peru, Argentina. So I started to suddenly work with all of those countries and become the first, host country for the Startup Nation Summit. So we invite more than 65, nationalities to have a taste of what was happening in Mexico. And Mexico link with North America, of course, and Latin America. So back then I decided, oh my God, this is a huge opportunity. So after, support the new generation of GPs in my country and in the region, I jumped to really have the leadership of the Mexico Ventures, which is the venture capital business unit at the Fund of Funds of Mexico. And then we launched a mezzanine arm. And then I asked, what about the impact? So we launched the first Latin America Fund of Funds with a large corporation, with a pension fund. We started to reshape the diversity of LPs investing in venture capital, and not only Mexico was linked with the region and with the continent. So that was really amazing. But at some point I said, I need to, scale the things up. I understand if is this only a challenge for this continent or if it's a global challenge. So I joined the global team at Santander Group, Santander Universities, which is one of the top banks in Europe and just a little bit back of the top 10 globally. So it was amazing. I started suddenly, Prashant, working for 15 different geographies, trying to support entrepreneurs, doing all my career back again, connect with angel investors, with VC funds, with creating all these challenges in these platforms and pitch competitions. And at the end, I understood that independently of it was an emerging economy or a development economy, the entrepreneurs and the startups has the same challenges at the early stages. Retain talent, access to clients and to market, and of course, financing, investment, right? So there's still a huge opportunity to create new kind of LPs that act and play the role like a GPs as well, that can understand both sides of the equation, and that had also been, an entrepreneurs or an intrapreneurs as well as I has been. So opportunity after these 2 decades, opportunity knocked at my door. A large family office was planning to launch a new investment platform, and that's way how I become a partner of the 100PC.
Got it. That's a super interesting story there, and I think you have like a wealth of experience from starting from Mexico, and now I think are you investing globally now at 1200 VC?
We are investing regionally. Our,
Mm-hmm.
geography, our target geography is Americas, the entire Americas. But we reserve a
Mm-hmm.
10% to really have this
Mm-hmm.
opportunistic approach to build a larger bridge with another region. So right now it's the Americas, our, geography. Mhm.
Right. And beyond that, the 10% is mostly for emerging economies other than Americas, right?
Yeah, it can be imagined a fund that is based in Israel, that it's creating a great
Mm-hmm.
technology, and they want to scale it up in Latin America or in North America. So we can really become a strategic partner for them. Or some funds in
Right.
Europe that are wanting to connect with the Spanish speaking countries, or
Mm-hmm.
also that want to use. Mexico has become like a pretty interesting spot to be the gateway for North America or Europe, or to trying to get access to United States or the North America market. So that's where we are
Yeah.
strategically positioned.
Yeah, absolutely. And so you're mostly focusing on the Americas, and that includes both the USA and regions Latin America as well. There Mexico inside that, right? So how do you look at these two different regions and funds that are coming from these two different regions, and what are the lenses there, and how do you evaluate the funds from different regions differently? Help us understand that.
Now that's really relevant because our let me tell you, our name and our genesis, it's the sense of time. So when your clock turns into 12:00 hours, for us it's like a new beginning, new start, new way to looking forward. So being at this level of the gateway of technologies, that what is happening in an emerging economy, but so linked to a development economy, it's strategically for us. So we do believe that the cross-regional opportunities are right there. I, it's relevant that we can definitely invest in, of course, the entire Americas opportunity, because we are aiming to have access to the most promising technologies that are solving the biggest problem of the world right now. So for that, you need to have access to the entire, innovation spectrum. So for that reason, we are targeting to look for the deep tech or frontier technology solutions in North America, and then that are also solving climate problems or the thinking foundational industries or digitalization value change. But also they can have a lot of benefits to connect with everything what is happening in the region in Latin America. It's a huge domestic market. There's a lot of problems still to solve. There's a lot of proven technologies that can be benefit of these large market and opportunities and demographic bonus and agro-industrial, edtech, all the things that have last name tech are really relevant in the region. So this differentiation and the different speeds and the different needs and the entire innovation spectrum, deep tech, tech based, and tech enables company allow us to really get the most benefit out of this diversity and opportunity. So that's it for us is really appealing. And actually, we
Right.
not only invest into funds, we also invest in directs precisely for the size of this opportunity that we are seeing to connect value chains, to connect opportunities, sectors, and cross paths about two different economies.
Right. Absolutely. And can you give us a sense of what's the split in your portfolio? So one split is, of course, the funds that you're backed in Latin American region versus the funds you're backed in the US ecosystem, right? And the other split being the funds that you've invested in versus the direct investments you make. So how do you split out the fund that, okay, this is section is for direct investments and this is for LP deployments?
Yeah, it's a great question. We like to call us ourselves like an investment platform because we don't like only to be like a box checker. So we want to create really a pretty interest and diverse portfolio. So our thesis is dual pronged, precisely because we are like outsourcing our pipeline and deal source, efforts across investing to specialized fund managers and that are really verticalized, even geographically for business model or for industry, and they have a great expertise there. Independently, they're emerging or established fund managers. For us, is really key that we can have access to the most promising, actors that are becoming the magnet for the most promising entrepreneurs, right? So our thesis is 50-50. It can be 60-40, 60 into funds, 40 into directs, because the strategy is really to have, access to plus 300 opportunities across the underlying portfolio companies that we invest across the funds. And our sweet spot, it's around 20 up to 100 million of target size in those funds in the Latin America and 20 up to 200 in North America. So with that sizes, we are guaranteeing that we have access to the most promising deal flow in early stages. And we create, a pretty strong relationship with our fund managers, with our GPs, because we want to have access to the most promising outliers companies. So we spend enough time to, review how these underlying portfolio companies are evolving, are, solving these problems, are scaling, how discipline has been with the unit economics, and how much value are creating to the market. So with that, we have enough time to do this strategic co-investment arm and direct investment, more Series A, Series B. But definitely there are that can benefit of our nature of our genesis of being cross-border, cross-regional investment firm. So with that, we are building relationship with these managers, very strong relationship with the managers, with the founders as well. So we definitely can connect the dots and say, if something is, imagine, advanced manufacturing or new materials, or something is happening, they can definitely benefit of the really strong network of manufacturing in the region and all the nearshoring, offshoring opportunities. Right now, there's a lot of talk around that, the size of this opportunity, particularly in this region. So we can definitely connect. So we are seeing that it's immense opportunity on reshaping foundational industries in the United States, for example, through science and climate related opportunities. And of course, this deep tech can connect of this context required for provide solutions to the Latin American countries or the other way. So that's how we designed the strategy and how we are planning to create the alpha return that everyone in this industry is expecting to provide to their LPs, right?
Right. Absolutely. And talking about backing these managers, so what are you really looking for in these managers when they're pitching to you, right? What are the key things that excite you, that make you want to commit?
Yeah, that's interesting because not of we are so emerging fund manager friendly. Let's put it that way. It's not only our first approach because we need to create a diversified portfolio, right? But we are truly believers that not every first-time fund has a first-time fund managers. Everyone that decides to launch, a fund is because they have a lot of experience, scars, lessons learned, and the courage to create a new investment firm. So, of course, I can tell you the top three things. We are looking for domain expertise and specializations, right? Because we building this investment platform, we would like to have the specialization across our investments into funds. And of course, that is linked to a differentiated deal flow. So that the managers can understand how they think to add value to the portfolio companies, how they're thinking to giving liquidity strategies ahead, because we are, in this industry, there's still a young ecosystem in Latin America, pretty well developed ecosystem in North America. And we evaluate a lot of their ability to win competitive deals while still an emerging fund manager with a discipline and valuations, right? So when evaluating emerging managers or established managers is never one most important factor than another, but definitely excellent reference from the founders. We really take time to call everyone, all the stakeholders that are around those fund managers, because at the end we want to build also a relationship with the founders, right? So for us, it's really relevant if they add value and they're open to do not only co-investments and follow the the rules for co-investment rights, or right, really create businesses together and with our LPs, because we really want to reshape the limited partnership role. We want to welcome them also like co-investors, and we do a lot of research talking with his colleagues, different stakeholders, proving their domain expertise for us is key. And at the end we are trying to evaluate how they can really source the best and most promising deal flow, and we are underwriting about people, so that is really relevant. So we also evaluate their values and the way that they do business, and that's the way that we are having access to the most promising GPs in the region.
Yeah, yeah, absolutely. And talking about once a GP has pitched you and you have some interest in that, right? So how much time does it typically take for that initial email or a meeting that a GP gets with you till the time that you make the commitment that okay, we are deploying this much capital into your firm, right?
It's a tricky question because it depends about when do you meet, because at the end we're talking about a people business, right? So we spend ton of amount of time building those relationships. So sometimes it takes, maybe right now we are doing the first commitments to people that we met 1 year ago when we were just launching and starting, and you cannot take like a, fair timeline. Traditionally, we are expecting to spend them before, something between 45 to 90 days. We really want to think not only like the traditional institutional LP, also like with the speed of a GP as well to take decision. It depends about the timing of the fund, where is the fund in their fundraising cycle, where we are on our allocation plan. But traditionally, we want to create things the most fast possible, but we want also to take the time to build a relationship, to evaluate if we are the right partners that can add value to that firm, and if we can build additional businesses with those fund managers, right? So when we think about 1200 like a platform, we look for synergies and symbiotic relationships. So where managers can feel part of 1200 and vice versa. So that is, I think, the most relevant part. And being a multi-regional, multi-vertical vehicle through specialization managers. So normally we need to take a little bit of time if you can have build that relationship for the long term. So that's a little bit our time frame, but it depends. It varies. Sometimes we have done deals in 2 months. Sometimes we have
Hmm.
taken a little bit more than that.
Got it. What's the maximum amount of time you've ever taken to do a deal?
Yeah, I think 90 days. Yeah.
Okay, 3 months.
One,
Okay, so
two,
it's
yeah,
between
3 months.
2 to 3 months. Okay, okay.
Yeah, two to
That,
three
that's
months.
that's
Yeah.
fair. Yeah, that's
That's fair.
fair. That's
Yeah.
fair.
That's we're trying to
Hmm.
yeah, that's the maximum that we have spent. We have a schedule our investment committee already in the year. So every 6 week we gather in to take even evaluate the portfolio or the pipeline or really take an investment decision. So that is
Hmm.
a cadence. And of course, we have bunch of opportunities, launching these initiatives in the last year and starting this first close this year. So yeah, we try to keep the things, under the best and
Right.
common practice of the industry.
Hmm.
Sometimes it takes longer, but it's not only because of our timing, it's because something is happening in the firm. There maybe are changing the target size, there maybe are decreasing it, there maybe are pivoting their investment thesis. So we are so open also to collaborate with them. And I think that's the key factor of being successful in this industry, right? To give time to
Right.
the things mature collectively and collaborate
Right.
with that.
Yeah, yeah, totally. And you've run VC funds yourself. Now you're investing in VC funds, and you've seen a lot of game film across the years that you've worked in the industry, right? What do you think are some of the traits of best performing funds?
Yeah, great question. One of the principal things, it depends, of course, in the maturity of the firm. So I can, tell you, like for emerging managers, we're largely looking in early showable or demonstrable ability to execute, their strategy they're selling to the market, because you don't have DPIs, you don't have a traditional things. Maybe they have been fund managers before in a different firms and they're launching their own initiative right now. So we evaluate their ability to win highly competitive deals, taking a firm building approach, the portfolio development, the like the indication that they are really follow their investment thesis, what they're selling to the market, how they are communicating with the rest of the stakeholders. But definitely one of the most relevant things that we evaluate, and I think the characteristic of performance VC funds that I've seen in this pretty global ecosystem, it's the deep domain expertise. That they are highly technical, that they are active investing, even if they start like in super angels and they launch their initiative. There's a lot of fund zeros and then fund one and then fund two. You need to create those stories. So I love the GPs or the venture capitals that are willing to roll up their sleeves and really help funders solve for persevere, their potentiality and the opportunity in the market. Is so challenging, and particularly when you are evaluating emerging economies and development economies. Even inside the development economies, there's a huge opportunity for emerging markets as well. That's why we are in love to connect the dots. So another thing that I think is a key characteristic for performing VC fund is that they don't spread and pray, and they're highly focused on discipline, on executing their strategy. Because sometimes there are 10, if they, raise more money or they change a little bit the strategy. So for me, the discipline and investment is key. And I've seen the most successful VC funds following that. And it's tied also to the target size, Prashant. Some of our LPs doesn't believe that we are still are seeing fund six around 50 million or 75 million or 100 million. They are not, you know, eclipsed by the sizes and by the number of GPs. They are so disciplined in that and like do it all over again, right? Deploy, create value, exit it, and do it all over again. So that I think is something that's a key characteristic of some of the most promising GPs at the early stages in the venture capital.
Absolutely. Yeah, that's a very interesting point you touched upon about, and I've heard LP say and even GP say that your fund size is your strategy, right? So tell me more about how should newer GPs be thinking about right sizing their fund so that they can optimize for the best returns. And as the firm grows over time, what's the right approach there? Should they try to stick to the same size or should they try to grow the AUM as a lot of firms do? What's the right approach there?
Yeah, that's a great point, and it's a strong conversation. Let's put it that way. But I'll try to put my experience on the table because this largely depends on stage and strategy, right? So where we look predominantly pre-seed and seed funds, we tend to favor sizes that are around 25, 75 million. So, and the data points is clear favorable in potential returns, right? So right now, if you are focused on early stages, it's so challenging to give returns and funds that are larger than 200 million, 250. And it's what is really happening in the industry, right? After the crazy evaluation, you have to be really careful about at what point you enter because it does tie to your exits. So if you increase a lot your fund size, and I'm talking about early stages particularly, you maybe can be challenging your opportunity to access deals, the evaluations, the discipline, and you tend to create a lot of reserves and maybe, put money where it's not needed already, or yet you need to really change the game. So they are starting to create like opportunity funds, create another fund. So I think they're starting to lose perspective and the strategy. So for me, that's a sweet spot. Of course, it depends totally, as I was saying in the beginning, on their strategy and the stage where they're willing to invest. But understanding the sweet spot for me and remaining disciplined on the fund size is key. So we are working with funds that are around, in funds one, 25 up to 50, and funds two like 30 up to 75 or 100, even fund six that is around 100. So I'm in love about, that they are not eclipsing that size because of the market, of the, ambitions to create another assets under management. They are just disciplined at the sweet spot where they can add value, how they can capture the most promising, deal flow and founders, and do it over again. So for me, that is really impressive, because at the end you have another actors, right? You have secondaries, you have the private equity firms, you have the corporate venture capital, which has been a huge movement that is scaling nowadays. So you have another actors that can yet definitely connect and create a lot of value for your LPs.
Right, right, absolutely. And in the question before, you mentioned about spinouts from VC firms that are now starting their own funds, and you're looking to you're interested in backing them as well. That's an interesting type of people who are starting their funds and they know the game, right? So much like when you're a VC and you're investing into startups, you're looking at second time founders because they know the game, they know how it looks like, how the scale looks like, right? And same holds true for spin outs, partners who have left their firms and are now starting their own firms, right?
Mhm.
So give me more perspective into that. Do the spin outs actually have a sweet spot in the hearts of LPs? That's one. And are there any other type of people that LPs have identified that, okay, these are the people who can make great GPs and give us successful returns?
That's a great question, because I think we are so brave to do, in an inaugural fund, emerging funds as well, because we have done in the past. So I think we can evaluate, we're not afraid to evaluate, the rest of the characteristics of a fund manager. Of course, this is a numbers game, right? This is a return and outliers game. But definitely those one that have done different acceleration programs or incubator programs, and they have actually done investments, managing, and other resources, and not being at the front door of leading all the investment process or putting their own money. I do believe that it still has a lot of lessons learned that can add a lot of value in how to really evaluate an investment opportunity. So that's why we are truly believers that we can definitely take a double click and a thorough process to analyze an emerging fund manager. And because we have been there, and we know that those, if they have the courage to really launch a fund on their own with all the network that they have built and all the lessons learned, we turn around and ask these startups, right, the founders, if they definitely will follow them in a fund, or will really create, a relationship with them. And the answer always, Prashad, has been yes. So we really use that feedback to evaluate the potentiality or the ability of a fund manager to succeed in the venture capital industry. Because our, hybrid investment thesis allow us to really, evaluate that. And let me tell you something. According to a recent research launched by Cambridge Associate, the most promising returns, the 73% of the returns of the early stages in venture capital, has become of emerging fund managers. So we are betting on that. So they are actually proven that have been successful because they are hungry. They are so, they have so much to show. So they are so disciplined. They have a great process, transparency. They are willing to collaborate to create value. So, and of course, in a fund two and a fund three, maybe they pivot in something and there are, perfection in their investment firms. So with that, we are so intrigued, and we really have a like a factory process to evaluate, all the kind of the different aspects of a manager, but it's really tied with their influence in the ecosystem and their ability to capture the best deals, the discipline to invest, to add value to a portfolio, and of course, their expertise in that particular geography or sector, which is what we're looking for this one.
Right.
So with that, we have been quite, let me say, successful to have access to these most promising fund managers in the ecosystem right now.
Right. Absolutely. So if I ask you that what's the single most important thing in a GP, that if I ask you that there's only one thing that you can look for in a set of GPs, and then you have to decide in which GP you're going to put your money in, right? So what's going to be that one thing, that one metric, or but that one factor that you look for in those GPs? What's the most important thing in GPs, basically?
I honestly, wow, that's a hard one. I think their expertise, if they have done it before, and how they are recognized for their peers and the rest of the actors in the ecosystem. Because I do believe when someone is able to add value, to connect, to build bridges, to really solve problems, that's a truly natural venture capitalist. So for me, that's key. That's the key element that we look in a fund manager, even
Right.
in a founder. It's pretty similar when you're evaluating, a founder, a founding team and a startup, and also a fund manager or emerging fund manager, so a team of managers, a GPs. You're evaluating the people and the capabilities to really create, outstanding results. So that has to do with their level of expertise, their commitment, their discipline, and the values that they communicate of the rest of the stakeholders that they have been, working with. And that for me is key to really partnering with someone that, okay, they is recognized by their peers, their colleagues, and the rest of the stakeholders in the ecosystem.
Right. Yeah, absolutely. Great answer. And at 1200 VC, you said that you have a strategy that you're investing into VC funds, but you're also making direct investments into Series A and Series B companies, basically the breakouts from the portfolio, right? So, how does that strategy of combination of investments into VC firms and direct investments into Series A, Series B startups help you get superior returns?
Yeah, that's actually our genesis and rationality. Thank you for asking that. But we believe our investment thesis allows for advantages in asymmetric insights and time to build direct conviction and to look through portfolio companies where we will consider definitely taking a more concentrated approach. So imagine that way. We are like just a fund, the investment platform that tends to invest also into funds and directs. We don't like to call ourselves like a fund of funds because we are not charging those fees. We are so efficient in unit economics, and we are really bringing additional view to the market. So our view is that making managers focus on the early stages allows us for understanding, the really foundationals of these founders and their businesses and progressing the risk in advance and subsequent rounds of capital. So that's is key for us. So we believe one of the advantages of this strategy is the concentrated approach on the direct side, which allows for a higher magnitude of returns, the alpha returns that we're expecting, than to pure invest only fund of funds and also, offer great co-investments opportunities for our LPs. That's another thing why we like to call ourselves like investment platform. And an additional, added value that we're providing also with this, hybrid investment thesis is that we can have access to a lot of data. And we are building a digital tool to map all the stakeholders, all what is happening in our, community, let's put it that way, Prashant, in our GPs and the founders and underlying portfolio and the stakeholders around that, and give access to our LPs 24/7 to where these, technologies would definitely cross paths, because that's why we are investing in the entire innovation spectrum and these, hybrid investment thesis, because we want to have access more information how these new companies or new trends are capturing value in the market, and definitely do a double bet in the outliers with that we can create an alpha return, but also we can create a lot of business intelligence around to collaborate with all these actors that we activate in under our investment platform. So that's for us is key. We are working with some of the team of the researchers at MIT to create this systematic value-added digital tool to map in what is happening in real time in our underlying portfolio and be ready and to create different co-investment opportunities also for our LPs, but for the market as well. So that is quite unique, I think, what we are building under 1200 BC, because we are looking for this opportunity. We are being really transparent and collaborative, but also we are trying to measure the outcomes out of, what we are achieving investing in these most promising technologies and across
Right.
funds and directs.
Absolutely. Yeah, that's certainly the best use of this model is that you get access to so much data, and I think you're making great use of that. Great. And what are the expected return multiples? Maybe what's the top quartile, top decile for the model that you've chosen for 1200 VC? What are those metrics at?
Yeah, we our expectation is to build, of course, 3x, 5x out of the funds, but definitely out of the direct opportunities, we are pursuing a 10x, 15x, percentage. So collectively, definitely we can create these alpha returns that the LPs are looking for. So we are aiming to really have, the traditional expectation of a venture capital industry around 30%, but definitely with this hybrid approach. So that is our expectation, and I do believe that we will achieve it.
That's very interesting. So you're trying to compete with VC returns in the model, in the hybrid model that you're following. Is that correct?
Correct. That's correct.
That's awesome. I think that a plus point there in the model that you're following is that it reduces a lot of risk that a VC has because you have so much wider exposure and you're just doubling down on the winners from that. So I think it's an
Absolutely.
incredible model. Yeah.
Absolutely. That's a great example. And let me
Hmm.
confess, I've been doing this for the last 20 years, right? I've been involved in these kind of initiatives and with my partners. So we collectively join like with our anchor investor, which is a large family office, with us like a fund managers of these hybrid investment platforms. So that is amazing. We have proven in the past that this works, that is the kind of results. So that's why we are bringing this product to the market nowadays. There's a huge gap to fill. There's a need of additional LPs working for the innovators, the early stages, the ones that are really having access to the cutting edge technologies. So that's why we put this product in place, thinking a lot. When you are selling an investment firm, you always are getting excited about the exposure, the geographics, the nature of your investment, your background, your discipline, bringing your entire trajectory into this new endeavor. And when you face the fees conversation, is like, oh, everybody like okay, but no thank you. So we thought a lot, because we have been an LPs and GPs and founders, so we thought a lot about how to really be appealing for every kind of LP, right? For serial entrepreneurs, for high-net-worth individuals, for family office, for corporation, for institutionals, how we can really provide a quite unique product, but a pretty, fair fees and with a pretty diversified approach. So yeah, that's a little bit of our genesis.
Totally, totally. And there's a unique model of investing, and I think it is a newer model of investing. Even fund of fund isn't that old yet, but I think this is even newer. So when you are going to LPs, your LPs, and pitching this model to them, are they very receptive to it? That they like it? Okay, yeah, this is great. They completely understand it, or they are like, okay, there's something new. We don't want to get into this. What's their reaction like?
Yeah, it's a great question. It's a mix of reactions. Let's put it that way. We have been really successful in those, that understand completely the venture capital, the busy game, right? They understand and they have the appetites and, let me say, the stomach to really wait the time, enough time to be patient, to engage for a long term, investment strategy, and to really think in the alternative assets early stages, like a diversified approach of their own portfolio. So with this platform, as you were saying, we are de-risking and rebalancing, risk return with these two, investment approach. And some of the family offices, for example, are the first time that they really have exposure to alternative assets. They have been doing investments tied to their current business, to the core business, right? To their core industry. And for them, it's like, oh, I have the opportunity to really, have more visibility of what are the next trends that eventually will disrupt my business. So that is something that is really appealing for them. The cross-regional approach, of course, has been really interesting for them. Like, okay, I'm, creating my wealth in Latin America, but I can have exposure to North America, for example, so I can, have that access. For the North American investors, it's like, okay, I can have an opportunity to deep dive into this trend, which is Latin America, that it's still a lack of information, what is going on real, right? That is a pretty young ecosystem. So like every emerging ecosystem, it's interesting for large investors and institutional investors, and also for high net worth individuals that have seen my career and they say, okay, you have seen a lot. So I just want to, I'm curious about what you're able to do with this investment platform with with the rest of your team. So that is another thing. And of course, some of them like look at us like, what are you? They want to put us a label, right? It's like we don't fit exactly a profile in their minds, and it's like, no, please don't put. I'm not a fan of funds. I'm not a traditional
Right.
VC. I'm an investment
Right.
platform, and that's why we
Mm-hmm.
put in place this digital tool, like systematic, mapping tool, because we wanted to really create like a platform experience, when they're investing in us. So it's really impressive. And let me tell you, of course, the other side. For some institutional, or let me say multilateral development banks or something like that, we are weirds. We are the weirdos in the table. And why? Because we are not box checkers, right? We are not only doing things in Latin America or only doing things in North America or only doing things for diversified founders or only, we are not, in a specific, we try to build a platform. So you need to be more open, of course, with a pretty focused strategy. Where is the sweet spot and where is the opportunity and when you are building that bridge? But it's like, oh no, I'm thinking about, Latin America is from Guatemala downstairs, so Mexico is North America, and we are like, dude, well, yeah, but we speak Spanish. So yeah, we are part of North America's trades, but nevertheless, we maybe are building those bridges because it's a huge opportunity there to capture value and to create, returns and high, social and sustainability impact. So yeah, that has been a little bit our story. So far so good. I can tell you in another program how this ended up.
Right. Right. Totally. Totally interesting. And do you have any percentage ownership targets in the funds that you are investing in?
Um, we are not targeting a specific percentage. However, we won't be more than 10%, and given the fund size, and do not foresee leading direct investments either. So our sweet spot is around 2 to 5 million into funds and 1 up to 3 into directs. But it's not tied to the percentage. It depends about the size and the market. So nothing more than 10% is around that, our
Got it.
objective. Mhm.
Sure. 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 Yeah, that's interesting. And one last question before we close this out. How do you look at the current exit market and how's that playing out within your portfolio? Would love to get your observations there.
Yeah, it's you let the tough question for the end, right? So it's hard, but we have seen through data that startups are staying private longer. But I was just talking with another LPs, and yeah, this very question, and all of them are interested to study how secondaries have really become the fastest growing exit strategy. I just had been participating in some family office events or LP events or gatherings across the region, and everyone is so intrigued about secondaries nowadays. And I think it's needed, even that it's a young ecosystem in Latin America, but a really well developed ecosystem in North America. Liquidity is needed. So I've seen a lot of activities in M&As, and a lot of GPs trying to pursue it. And And all this dream about unicorns and everything is a little bit, like on the other side, because there's a lot of restrictions. There's not a liquidity really out there. So I'm seeing that M&A uptick, IPOs is slow, coming back to live, see, and exit environment have an even flow. And right now they are trending towards normalization, from a slump. So there's some macro headwinds still play out overall, moving in the right directions.
Absolutely. Yeah, that's interesting to learn. Thanks so much. And now I'll do the rapid fire round wherein I'll ask you four quick questions about the investments you're making in VC funds. And you can also say for the direct investments. And you have to give five quick answers, right? Four, five, right?
I
So the
promise
first one is,
to
yeah,
do it quickly.
awesome. So the first one is, what are the themes and regions you invest in?
Yeah. Deep tech for sustainable development in US and Latam, tech based and improving productivity and infrastructure for also US and Latam. And the third one is tech enabled companies that help us with the demographic changes across the Americas. So that is, I think, our strategy more cross border.
Great. What's the typical LP commitment check size that you put in?
Yeah, it's something around two up to five for our fund investments and one up to three for directs, Series A, Series B.
Right. Where can GPs get in touch with you if they're fundraising? If
Okay,
there's a
through
direct way.
yeah, of course, through our webpage,
Okay.
1200.bc, and of course at our LinkedIn profile page, 1200bc as well.
Awesome. And what's the stage of the fund where you typically invest? Is it fund one, fund two, or is it even beyond that?
Yes, it's beyond that. We like to create a quite diversified portfolio. So we're currently investing in funds one up to funds four. So that's what we have in our portfolio. So it depends about the size. And we are really focused on early stages. So we are, willing that these funds are the first, checks in these companies, and they're creating a strong relationship
Right.
with the founder. So we can also do directs after on.
Absolutely. Last one. Where can our listeners follow you?
I'm more active on LinkedIn. I'm not such a social media person, but yeah, you can definitely follow my profile in LinkedIn and sometime on X. You can find me there. Adriana
Absolutely.
Tortajada. I have a pretty Spanish name, but Tortajada, we can spell it. So A Tortajada or Adriana Tortajada.
Okay. Okay. Awesome. I'll make sure to put the links in the show notes below. Thanks so much for making time for this, Adriana. It's been a pleasure having you on and loved all your insights. Thank you.
Thank you very much, Prashant, for having me. You are doing a great job communicating underdog stories around the globe.
Thank you. Thank you so much.